Hey everyone, and today we are going to talk about two companies that seem to have a good potential ahead based on their recent filings. So, the first one is a digital transformation player that has signed a MOU with Hungary's E Group ICT software to build a sovereign human-centric AI Gigafactory, and the second one is a precision engineering manufacturer that has secured a 386 crores order from Bloom Energy, which equals to over half of last year's revenue, ensuring clear visibility into FY26 and 27. So together these developments reflect how AI and clean energy are emerging as powerful engine for industrial growth, driving both innovation and long-term visibility. So welcome to another episode of Noisemaker, where we keep things simple and talk about companies that may not always come in the spotlight, but they have a strong potential for future. I am Saijal, Equity Research Analyst at Desvelado Advisory, and today we are going to talk about two companies that are making solid progress in their business, and if current trends continue, they might keep growing even further. But before that, here is a quick look at the disclaimer. So any discussion, facts or writings provided here are for informational purposes only and do not constitute any buy or sell recommendation. So please conduct your own due diligence before making any investment decision. Now let's move to the first company, which is Kellton Tech Solutions Limited, an IT services and digital transformation firm with around 1,800 employees and operations across the US, Europe, India and APAC. Recently, the company signed an MOU with Hungary's E-Group ICT Software ZRT under the EU-India Framework Agreement to build a sovereign human-centric AI ecosystem through an AI Gigafactory. Now, this partnership is significant as it provides Kellton direct access to Europe's sovereign AI market, where compliance, security, and trust, all of these are really critical. Combined with its technology delivery strength from India, this could translate into a premium long-term contracts, recurring AI revenue, and stronger positioning as a global AI infrastructure partner. Now, the timing is also favorable, giving rising demand for agentic AI projects with CXOs prioritizing efficiency, compliance, and profitability. And if executed well, Kellton could surely extend its order book visibility, improve margin, and unlock new opportunities in the market, adopting data sovereignty platforms. Now, Deepali will be joining in to give us more details about the company. So, Deepali, how do you assess the company's financial performance so far?
Thanks, Ajit. On the financial front, Kelton's delivered steady growth in FY25. Revenue from operations rose 11.7% year-on-year to 1,097.8 crore, compared to 982.9 crore in FY24. Importantly, the momentum carried into Q1 FY26 with revenue at 295.5 crore, up 12.8% year-on-year and 3.2% quarter-on-quarter. This shows sustained demand across its client base. On profitability side was also encouraging. EBITDA grew 22.1% year-on-year to 129.8 crore in FY25, with margins improving modestly to 11.8% from 10.8%. In Q1 FY26, EBITDA stood at 35.8 crore, translating to a healthy 12.1% margin. At the net level, profit rose 24.7% year-on-year to 79.8 crore in FY25 versus 64 crore in FY24, with margins strengthening to 7.3% from 6.5%. Q1 FY26 net profit hit 22.7 crore, the best in the last 5 quarters, clearly pointing towards improving profitability. But Sejal, what do you think is Kelton's roadmap for sustaining this growth into the next phase?
Great question, Dipali. I think Kellton is working on a multi-pronged strategy for its next leg of growth. So first, it's expanding geographically into North America, APAC, and the Middle East to reduce the dependence on any single market. And this expansion is being driven by targeted client acquisition, global tech event partner participations, and forming local partnerships. And all of this is aimed at diversifying revenue streams and ensuring more stable, balanced growth. And second, the company is evolving its in-house AI platform KAI into a subscription-based SaaS product by enhancing its features, integrating it with enterprise systems, and running pilot programs. Kellton aims to create a predictable, high-margin recurring revenue stream. Embedding KAI deeper into client operations will also strengthen stickiness and long-term engagement as well. So, Dipali, with this AI-led solution and geographical expansion in play, do you think that Kellton has what it takes to stand out in the crowded IT services space?
In my view, Sejal, yes, Kellton is moving from a traditional IT services provider toward becoming a next-gen AI-driven solution partner. Its strategic bets on sovereign AI recurring SaaS revenues and global expansion set it apart from mid-tier peers. With consistent financial execution and the ability to convert its AI initiatives into scalable revenue, Kelton has the potential to significantly upgrade its profile in the IT services ecosystem.
Well put, Dipali. Now let's move to the second company, MTAR Technologies Limited, which basically develops and manufactures components and equipments for defense, aerospace, nuclear, and clean energy sectors. Now, recently, the company secured a large 386 crores order from long-standing client Bloom Energy in the clear energy fuel cell segment. And out of this, 205 crores will be executed by Q4 FY26 and the remaining 181 crores by Q1 FY27, offering clear revenue visibility for the coming years. Now, this win underscores MTAR's strong execution, cost competitiveness, and increasing wallet share with Bloom. Now, notably, the recent US tariff changes worked in MTR's favor as Bloom raised its procurement forecast by 25% for the coming fiscal year. And looking ahead, MTAR is also guiding 25% overall revenue growth with around 21% EBITDA margins, further supported by 1,000 crores of nuclear pipeline and nearly 80% growth in aerospace and defense. Now, Dipali, how do you read MTAR's recent financial performance?
Uh, on the numbers side, MTAR delivered solid top-line growth in FY25. Revenue rose 16.4% year-on-year to 676 crore versus 580.8 crore in FY24. Despite some quarterly fluctuations, in Q1 FY26 revenue stood at 156.6 crore, down 14.5% sequentially, as order execution tends to be uneven across projects. On the profitability side, EBITDA increased to 120.9 crore in FY25 from 112.7 crore in FY24, though margins softened slightly to 17.8% from 19.2% due to higher input cost. In Q1 FY26, EBITDA came in at 28.4 crore with margins of 18.1%, broadly stable. At the net level, profit was 52.9 crore in FY25 versus 56.1 crore in FY24. As cost pressures weigh on margins, in Q1 FY26, net profit stood at 10.8 crore. So, Sejal, given this margin pressures, what's MTAR's roadmap to sustain growth and improve profitability?
Great question, Dipali. I think MTR is actively diversifying its portfolio to smoothen the earnings or reduce the reliance on any single vertical. And the key step is its entry into the oil and gas sector through a 5-year long-term agreement with Weatherford, backed by a new dedicated facility of around 70 crores capex in FY26. And this ensures recurring inflows, improving revenue stability. In parallel, if we talk, the company is also exploring new energy technologies. It has developed prototypes in Fluence in the battery and energy storage space, with more in the pipeline. And if these prototypes convert to volume orders, MTR could unlock recurring revenues in high growth sectors like fuel cells, battery, hydro, wind. So, Dipali, do you think that this diversification strategy can help MTR balance short term margin pressures while building a stronger long term growth runway?
In my view, yes. While near-term cost pressures are a challenge, MTR's combination of strong order visibility from Bloom, nuclear and defense pipeline, and diversification into oil and gas and new energy solution gives it a multi-year growth runway. If it executes well, the company can not only sustain but potentially expand margins over time. The key will be converting these strategic bets like Fluence prototypes into large-scale recurring orders.
Totally agree with you, Dipali. And I think both the companies together highlight how AI and clean energy are booming, pivotal catalyst of industrial growth, fueling the technological progress and strengthening long-term prospects as well. So thanks a lot for all this information that you gave us. It helped us to understand the direction both these companies are moving in. And now let's talk about the previous picks which we covered in recent noisemakers previously. Sangvi Movers Limited from 283 rupees to 328.9 rupees, and it's a gain of around 16.2%. Datamatics Global Services Limited from rupees 1035, it is now at rupees 930.5, which shows a decline of around 10.1%. Transrail Lightning Limited from rupees 731.9, it's now at rupees 791.3, which is a gain of around 8.1%. VST Dealers Tractors Limited from 4,575.2 rupees to 5,385.5, it's a gain of around 17.7%, and Access Technologies Limited from 1283.5 to 1480.1, it's a gain of around 15.3. So overall, a pretty good mix of gains, and we'll continue to monitor all these companies closely to see how they shape up in the coming quarters. And here is the QR through which you can access all the previous picks which we covered recently. And now let's move to the summary of today's company which we included in today's Noisemaker. Kellton Tech Solutions Limited, which has signed an MOU with Hungary's e-group ICT software ZRT under the EU-India Framework Agreement to build a sovereign human-centric AI ecosystem, and MTAR Technologies Limited, where the company has received a large order worth of around 386 crores, which makes around 57% of FY25 revenues from its long-standing customer Bloom Energy in the clean energy fuel cell segment. So that's it for today's edition of Noisemaker, and if you found this breakdown informative, you can scan the QR code to read the full report, and we'll be back soon with more simple and clear market updates. Until then, stay curious, stay ahead and stay informed.